Accessing Secure Channel. The Agent Files, where aspiring agents rise and masters flourish. Powered by Agent Builder Coaching. Mission initiated. File loading.
Hi there, this is Peter Fan for Agent Builder Coaching, and this is the Agent Files, and specifically for almost agents. So the agents that have pretty much completed all of their pre-licensing education, they may even have passed their exam, and they're getting ready to activate their license. So not quite agents, almost agents. Okay. Now, this week's or today's topic is really one of those topics that I hope that you truly take advantage of the information that is in here, because it is so important to be real on the financial parts of this business. This is nothing like a job. It's nothing like your typical career. And because of that, it's really important to pay attention to the financial matters of this business. Okay. We're going to touch on a number of things, and we're not going to go super deep on them, because you really should talk in your own situation, on your own particulars with, a financial planner, an accountant, a tax expert, somebody that actually understands both the tax implications in the context of real estate and where the rest of your financial situation sits, because there may be some valid reasons to do certain things faster than in other circumstances. For example, some realtors decide to start a personal incorporation, and that's very much an option in a good number of the jurisdictions. I believe almost all of the provincial jurisdictions in Canada now allow it. And there are some advantages for it, but it's not always cost effective at the early stages of your career. So there's a kind of a tipping point, economies of scale, if you want to call it that, where it makes sense to keep some or part of your real estate related income inside of a corporation, because then it's taxed at a lower rate, and you can therefore do a little bit more tax planning and what have you. But it doesn't always make sense, because the cost of doing so can be actually fairly significant. For example, and it's just a tip of the iceberg type of thing, you do require two licenses, your personal license as well as your incorporated license. So your startup fees to do that right off the bat are twice as high. You're running two licenses for one set of activities. So and then you have to file annual reports and yada, yada, yada. So it comes with some downside, but the upside can be significant enough that it's worth your while. There's a bit of a tipping point, and everybody talks about different amounts, but it really depends on your total income portfolio. If you have income from pensions and other sources, it may make it more or less advantageous to do it sooner or later. Okay, anyway, that's just a little bit of an aside, but it's certainly part and parcel of financial system. A very significant set of decisions. So, an interesting comment by Joe Biden many years ago is, "Don't tell me what you value. Show me your budget, and I'll tell you what you value." Things show up in your financial behavior, right? What you spend money on tends to be the things that you value. Makes some sort of sense, I suppose. In planning this business, it is really quite important to understand the difference between a job and this business. This is kind of a hybrid in between, professional contracting industry and jobs. There are definitely a number of deductions that you have access to, but in some cases you need to actually make some distinct decisions as to what you do and how you do certain things. Real estate is deemed to be a self-employed business under the eyes of CRA, the Canada Revenue Agency, and they have a kind of a separate classification for commission sales, independent contractor statuses. That is not exclusive just to real estate, but there a good number of realtors use that kind of general category. So um, it requires you to keep some sort of records or the particular categories of records that are definitely part and parcel of your independent contractor status, which is kind of job number one. If you get into the real estate business, I'm not sure how many real estate brokerages still use an employmency status uh, relationship with the agents. I would say the vast majority are now treating the relationship between themselves and the real estate agent as an independent contractor status. There are some criteria for that to qualify for that, and it's typically articulated in your contract with the brokers that you're joining. So have a look at that. But I'm going to say, for the most part, it would be fairly rare to find a real estate brokerage that is still operating under an employment status. There may be one or two. There's too many brokerages out there that it's impossible to know all the contracts. So have a look at that contract. But for the most part, you're likely going to be an independent contractor status. Now, what are the differences? If you are deemed an employee, then your at-home expenses may not necessarily be deductible. So that's one significant difference. So it is important to kind of know. Now, if you do operate as an independent contractor, or you're planning on operating as an independent contractor, then there are some at-home expenses, some operating expenses that then become deductible. But again, you got to keep records, and it's got to make sense, right? If you live in 1,000 square foot house and you're going to allocate 500 square foot as your office, Revenue Canada may have an issue with that, right? They may just say that's disproportional to your living space, and as such, they may not allow all of those deductions. Again, it does absolutely require you to keep accurate records from day one. So you can plan for a lot of this stuff, right? Now, again, income is irregular, so you got to plan for these highs and lows, and planning really becomes a real key part. And unfortunately, too many agents enter the business with a budget that is just not self-sustaining. The expectation of making an income right away is set the bar too high for it to be realistic. So having a healthy buffer, and I would say upwards of about 6 months worth of living expenses, is not a bad start. Okay, some people suggest even as high as 12 months worth of living expenses would be a good idea. So here are some pre-licensing things to think about. I would absolutely separate your business and your personal expenses. It will make your life so much easier. By the way, this is a lesson I learned way too late. Okay, I was told, in the days that I started, everybody was an employee. It was independent contractor status was not even an option. Okay, that came quite a few years later. But even then, they said, okay, you need to separate your personal and your business. It makes your accounting that much easier to manage on a day-to-day, on an annual basis. And I wish I'd listened to that way earlier, because it's absolutely true. And it's actually hard to undo a bad habit in that regards, because you got debit and credit cards that get intermingled, and so everything becomes a mess. So you're now kind of monitoring 4 accounts, not 2 accounts, not just your regular banking account, but also your credit cards, and it just becomes a mess. So I would strongly urge you to separate your business and your personal accounts right away. Operating a business account does not need to cost a lot of money, if any. But it's absolutely worth your while to do so. Okay. The other thing I'm going to encourage you to do, and it's just a tidbit that I found out, many of the banks now by default do not give you paper records anymore, paper statements. that in essence is not so bad. The challenge is that if you don't monitor your statements and you download your statements on a monthly basis, banks nowadays online only keep about 18 months worth of records. So I know realtors, and I'm one of them. It's quite likely that all of a sudden you go like, oh, I need to do my taxes, and you're 17, 18 months into your beginning of your a year, and oops, now you've got to scramble to get all your statements, and sometimes you're going to miss out, and it becomes a real problem to get those statements in order for you to separate them out, what were your expenses, and then you're really scrambling with receipts and all of that type of stuff. So it becomes a bit of a logistic and an operational nightmare. Okay. Next point is you have a budget, right? You got to have some sort of a budget, and it does require you to kind of sit down and understand the fees and charges that are going to come at you when you start. So that's your licensing and your E&O. In some cases, you need to think about your car insurance, cell phones, internet that you use, and so on and so forth, because you're going to use your cell phone a lot more. You're going to use the internet a lot more. And so sometimes you have to upgrade some plans and some speed and some capacity for data on your phones or on your home internet network. So those are some of the things. And then, of course, there are some marketing expenses that you will run into, but it's as little as business cards and a few signs, and then maybe some internet use as far as websites and ad campaigns and what have you, setting up some materials and or some campaigns. You may need a little bit of actually paid training, education. It's not a bad idea to work with somebody that you have a high regard for, high respect level for, high trust level for. And if they charge you a little bit of money, that may not really be a waste of time. Don't try to do everything on the cheap, is what I'm suggesting to you. I hear lots and lots of agents say, well, I'll talk to all the other agents. Yeah, well, that's not necessarily the best advice. Okay, there's lots and lots of great agents with the best of intentions, but they don't necessarily relate to your specific situation. So be attentive to what it is that you actually are looking for and consider the source, right? Is it the information that you're being handed, is it truly applicable to your specific situation, right? There's so many variables in that regard. But anyway, so you may need to spend a little bit of money on some educational bits and pieces, whether that's coaching or set up systems or that type of thing. Okay. Now, how you track your expenses and your business operations is entirely up to you. There are many, many online portals where you can do this at a small fee. There's the odd ones that are claiming to be free, but there always is some sort of a back end charge on it, or a fee that is hidden somewhere in there. But there are many different financial planning and accounting type spreadsheets with templates that you can import and just fill in the blanks if you so want to. You've heard me say things about Etsy, but it's a really good source for various things, and stuff like spreadsheets for real estate accounting are not a bad thing to search for, because then a lot of it is set up, and you can customize it a little bit, of course. It's a spreadsheet, so you can always kind of alter things, but then you've got a good starting point at a few dollars, and you're up and running fairly quickly. Okay. And yes, do consult with an accountant that is familiar with real estate salespeople. It's important to ask that question. Okay. Do you have any practicing real estate agents currently in your portfolio of clients, and and then carry on with whatever specific questions that you want answers to. It's really helpful to know that a accountant, financial planner, bookkeeper on the cheaper side of things is familiar with the business of real estate. Many will say that they are, and test that a little bit, okay? Because it's actually quite a significant difference between your average contractor and an independent contractor in real estate commission sales. It's the commission sales part that oftentimes throws off these bookkeepers and accounting firms. So, okay. Now, some core categories of real estate budgets, but also expenses. But your fixed costs are things like your brokerage fee, the real estate board. In some jurisdictions, the board fees also include fees like CREA or the BCREA or your provincial association, I should say. CREA being the Canadian Real Estate Association, and we're all kind of supposedly voluntary, but there's no option to take yourself out of that. If you are an active realtor in a real estate board, you typically also have to pay for Canadian Real Estate Association because your listings will show up on their portals. Now, it's kind of a hybrid. Some boards charge by the listing and by the sale as well. It is technically a variable cost, but you start producing, it becomes kind of an ongoing thing. So it's something to keep an eye on. But again, it's kind of in between a variable and a fixed cost. But marketing, of course, too, client gifts. Then, of course, you have your gas and your telephone and your internet, and in some companies you may have to pay extra for things like do not call list subscriptions and websites, and all of those are business related, operational related expenses. And then you have transactional specific expenses. For example, pretty much every listing that you'll ever take, you need to do a title search. You may have to do a freedom of information request, and there's typically some charges that if it is a strata or a homeowners association type format, dependent on where you are, the names of these things are different in each jurisdiction. In BC, it's called the Strata Property Act. So if you buy or list a property in a condominium development or a townhouse development or something that has some sort of a shared ownership component to it, there's typically a requirement to provide bylaws and plans and rules and regulations and minutes and financials and depreciation reports and engineering reports, anything that is going on within that complex. Now you think that that's nominal. Well, you talk to a property manager in order to get all that information. Don't be surprised if a package like that will cost you $100 to $200, sometimes even $300, depending on how much paper is involved. Because certainly in BC, there's actually a stated rate that they can charge you. So one of the more expensive pieces is what in BC is called a Form B, and it's a document that sets out a picture in time, the relationship between the corporation or the entity that runs the shared ownership component and the individual owner, whether there's any outstanding balances, if there's any complaints, if there's anything in the works or what have you. And that one document, typically 2 or 3 pages, they can charge as much as $60, $70 for it, depending on if you have a rush order or on a regular delivery. So expenses can really add up. You take a listing on a new, you take a new listing, and all of a sudden you need to do photographs and videos and floor plans and all that type of stuff. Well, don't be surprised if something like a marketing package with all of the images and the virtual staging and virtual tours and videos and drones and $1,000 to $1,500 to $2,000 is not out of the ordinary. Okay, and that's an expense that you're going to incur prior to you making any money on this property, and virtually no way to recover it unless you have a listing agreement with the seller that states that they will pay you for those operating expenses. But those agreements are still quite rare. There are some agents that are starting to provide for that, but they're not many. Okay, so those are some variable costs and operating expenses that are real, that are absolutely tax deductible, but they are certainly real expenses. Okay, and then of course you have your living expenses and your personal draw. And yes, from each transaction, I would always strongly encourage that you set aside the GST component, right? Because there's GST on, or HST in some jurisdictions, on your commissions, and you need to put some money away for income taxes. Okay, having your own separate account for that is a good idea. Some brokerages offer this as an add-on service. Many of them do it for free, but it can be quite helpful because it becomes now a forced saving plan that prevents you from getting yourself into trouble by the time that your taxes are due, because at least now there's some money somewhere that is kept in separate from all your other operating expenses, and it prevents you from kind of dipping into that. Okay, and then you have savings and reserves that you should build up. In the first year or so, that may not always be possible, but it's certainly encouraged. Okay, so those are some of the categories that you should think about. You have to file annually with Revenue Canada. And if you hit a certain threshold after your first year, it's not unexpected for you to have to start filing quarterly, particularly if your GST revenue is at a certain threshold. So if you have to pay more than $3,000 in 1 year, then you quite likely have to file every quarter for at least a GST, in some cases also your income tax. Okay, so that's something to keep an eye on, because then it becomes a much more real operational piece that you got to keep an eye on as well. Okay, deductible expenses, like I said, are things like marketing and mileage and phone and home office. Can be, but you got to be careful. And yes, you could, in theory, also use things like your internet, or at least part of your internet, and so on and so forth. Now, there's one caution here on the home office kind of expenses and deducting things. For example, I've heard some agents say, hey, if I can allocate space in my home as my office, does that make part of my mortgage on that home also deductible? And I would encourage you to really have a discussion with your accountant about that, because there are some options there. But don't be surprised that if you sell the home, that Revenue Canada now said, hey, you made this a commercial property, and therefore your capital gains exemption on the sale of a personal residence may be under jeopardy. Okay, maybe questioned, maybe a challenge. Okay, so something to really keep an eye on when you're preparing yourself, and now is the time to kind of figure that out and allocate what makes sense of what doesn't make sense, and keep copies of all your receipts. It's just, you got to keep it for a good number of years, because if you do get audited, your statements may not be enough. They may not be enough. Nowadays they're getting better and better to just use the statements, because so many transactions are digital and there is no actual receipt, right? But if there are receipts, you certainly need to keep copies of them. Okay. Yes, consider incorporation once your income becomes stable, and at a certain threshold, right? In the past few years, more and more people have started to incorporate, not necessarily for financial reasons, because they thought it gave them, a degree of status, a degree of, now the general public and their peers deem them to be more successful because it has this PREC, or Personal Real Estate Corporation designation at the end of their name. I'm not sure whether that's a good enough reason to spend a fair amount of money without, and having to do some extra accounting work, without having an actual return on investment or not. But it's a consideration, I suppose. It's the threshold for it to make sense is somewhere around the $180,000 to $250,000 in gross income that would be part of the corporation for it to make sense. Now, you cannot bring other income into the Personal Real Estate Corporation, so it would have to come out of real estate related revenues, okay, or licensing revenues. So it's a fairly decent income before the economics make sense, but there may be other compelling reasons to do it. Right? If you have other income from other sources, and this personal income now starts affecting your tax rate because of it getting combined with other income, then there may be compelling reasons to do it much earlier than that. Okay. All right, here's an exercise, and I'm going to suggest that you do this exercise because it is really important for you to understand the dynamics of this, right? You embed these things into your day-to-day practice and understand these things. Okay, write down your expected startup costs. Yes, there are lists. We can provide you with some general information. BCFSA will have a list on it in British Columbia, so every jurisdiction probably has something similar. You can talk to brokerages that you're thinking about because they will have some startup fees that they may charge you to get activated with them. You may think, talk with some accountants and what have you, but really do the exercise so that you understand what you're up against as far as, in a logical, rational way, without overdoing it, what your needs are going to be financially before you get started. Okay, and then list your personal monthly expenses, and then estimate your business expenses. Okay. With that knowledge, you now know, you're, as we used to call it, what is your break-even point to be able to balance your income and expenses. How much money do I need to make each and every month to break even, right? Well, you can also, in your marketplace, establish what is an average value of a commission check. High or low, you can figure it out. Now, I would estimate your average income per transaction somewhat on the low side because traditionally, and I'm giving you generalities here a little bit, and your situation may be different, but you don't always have a choice to these things. It tends to be that in the beginning of many agents' careers, that the average income per transaction is a bit lower because they tend to sell the lower end of the marketplace. Don't ask me why that is. There is no rhyme, no reason, there's no logic, there's no threshold of licensing that says, you can only sell up to X amount of dollars in property value. No, it just happens that way. It's just, I don't know why, but maybe it has a little bit to do that the more established agents don't even want to deal with the lower end of the marketplace. That may have something to do with it, but it's too crude and too, simplistic of an approach to make that assumption, but it may be a bit of an indication. Anyway, so calculate what the average income per transaction is in your market, minus it by about 10%, and then say, okay, if in my marketplace, the average income per transaction for my side, after my split with the company, after my fixed expenses, is, say, $5,000, right? But between my personal expenses, my mortgage, my operating expenses as a realtor, my taxes, all of my bits and pieces that I need to allocate, I need to make somewhere around $7,000 a month. Okay, I can clearly not live on one transaction a month, right? So my target now becomes 2+ transactions per month. Then you can start really honing down into how many activities do I need to do in order to generate that type of transaction. Okay, it's that's kind of the where you take your income and expenses needs and transition them into, okay, what does that actually mean in the number of transactions that I need to do in order to break even or better? And if you know that from nothing to complete a transaction. So if you have a lead, a suspect, not even an actual lead, but from the early days of interacting with a potential buyer or seller to a closed transaction, on average, is somewhere between 90 to 120 days. Okay? So you meet somebody today, and they are genuine, but they're not kind of all the way committed to buy something in the next little while. So you have to take them through a little bit of an education, maybe qualification, get the paperwork sorted out, to get all of the bits and pieces sorted out, to an actual paycheck in your pocket, 90 to 120 days. Okay. That means that, from day one, if your operating expenses are somewhere around $3,000 to $5,000, you can tell really quickly that, oops, I need to really get on with things, because before I get my first paycheck, I'm already 3 to 4 months in the hole, at a tune, if you calculate it out real quickly, of about, say, upwards to $12,000 if your operating costs are $3,000. If it's more than that, if it's $4,000 or $5,000, then obviously it's $16,000 to $20,000 that you're out of pocket in some way, shape, or form before you start making any kind of paycheck. You see how significant understanding the numbers is in this business, right? We talked about by the numbers earlier, but this is really where your income and expenses and your financial management becomes quite important, to understand this on the way in. Okay, and it's not to scare you. It's not at all. This is just reality. Okay, and to be honest with you, there is not too many sources that talk candidly like we are today about this subject, and it's one of the reasons why so many agents eventually look and go like, "Why did I get into this business? I didn't have a clue what the ramifications are on the financial side of this business." And if I had fully understood that, I would have done this totally differently, right? It's no big surprise to us in the business that are kind of the survivors, that so many agents leave the industry literally within a year, because they totally underestimated this period from beginning the business to being able to become financial self-sufficient. That has nothing to do with talent. Nothing. Right? You can work your butt off, and it still doesn't mean that you're going to have enough paychecks coming in the first 90 days to 120 days to cover your costs. Okay? It's just one of the really harsh realities of this business. That's why this exercise is so important, right? Because you can kind of look at this realistically and say, oh, okay, I can handle this, or I can manage this, or I have enough income, or I have enough reserves to make this work, or what do I need to do in order to make this work, right? It's just, you're much better off to take this at face value and really understand the realities of this business, particularly on the financial part, to properly prepare for this business in a way that you can manage and handle. Now, are there areas where you can potentially save some cost? Yeah, of course there are. Right? You don't have to spend a fortune on marketing. You can do a lot of stuff yourself. If you're really a socialite, then you can interact with people on a day-to-day basis. You've heard me tell this story before, but the most successful agent that I've dealt with ever was spending very, very little money on marketing for his entire career. But he was doing 60 to 65 transactions a year by pure, energy and activities that he did, making sure that he was in front of people, talking to people at least 20 to 25 per day, each and every day that he was licensed and active in the business. And that generated all of the energy and all of the activities. And if he didn't have people on his list to talk to, he would literally walk into the mall and would compliment people and say, "Man, you're doing a great job. We need people like you in real estate." Right? And then start a conversation and build a relationship from that. And, so that didn't cost him any money, right? Just energy. And the energy would give him inspiration and motivation. And, was it sometimes harsh? Yeah, of course. But he persevered and persisted. But that consistency of him making the commitment, saying, "Hey, if I have control and influence over what I do and how I do things, then I can influence the outcome as well." Right? So there you have it. That's kind of the crossover between the financial part and the activity part, where they actually come together and deal with, not just, your financial output, but being able to now recognize what is necessary in order to pay for it all along the way. Okay? So having good financial systems actually do protect you from some burnout, because it's you will recognize real quick, is this actually contributing to the bottom line? Am I spending money for the sake of spending money? Did I get myself into something that is not actually paying for itself? Because you can now see, hey, I'm spending $500 per month on Google Ads, and I'm getting 1 lead a month out of it, or 5 leads a month out of it, or 10 leads a month out of it. And how many of those am I converting to actual buyers and actual sellers? Right? Lead generation by paying for ads is likely to be successful as far as lead generation. But leads are not paychecks. Right? Leads are just a starting point. So if I heard one agent one time say, I did a lot of Google ads and I got a lot of leads. I got one month I had over 1,000 leads. And I said, "Wow, congratulations. How did you do? How many deals did you do?" "Oh, 0, because they were all duds. They were all terrible leads." And I said, "Well, what do you mean by that?" He said, "Well, we phoned them and we followed up and said, when are you ready to buy and sell?" And everybody said, "Well, we're not ready to buy and sell. We're just looking." And that was the end of the dialogue. And the agent had never realized that the responses on ads were invitations to build a relationship, and that the relationship needed to be nurtured and monitored and needed to be converted into trusted relationship and advocacy, and so that if and when the buyer or the seller was actually ready to do something in real estate, they would see this particular agent as a trusted ally. Well, that takes time. So he'd spend all the money and had decided that, that was a waste of time and money, and decided to do something else. So he did actually the lead generation all well, but just didn't follow through on it. So there's so many pieces to this that, the financial part, holding your money accountable. If you're going to spend money on something and not follow through with it, then it's not the money that's the mistake, right? Please understand what I just said. This is nothing to do about the money, other than you didn't optimize the spending of that money. well, then it's a waste of money. Sorry. Right? Then you're better off not spending that money. Maybe if you like to do door knocking or open houses or meeting people in workshops or presentations or what have you, then reallocate your funds, your budget, and say, oh, I'm going to spend it over there. And you need to look in the mirror about that. Like, what works for me, right? Not what does everybody else do? Let me copy that. No, what works for you? If you're absolutely uncomfortable door knocking or cold calling or any of that stuff, then don't do it. Right? Yeah, everybody else will say, well, you got to call, door knock and cold call and go after expired listing. Sure, they're really good ways of generating business. But if you hate doing it and you resent and resist doing it, then you think that the people on the other side of the door and the other side of the phone line might just notice that you actually don't like what you're talking about. Of course they are. And that never is going to turn out well. So you might as well find a way to connect with people, because you still need to connect with people that you like to talk to, right? And again, this is all part and parcel of taking your financial situation into the real world, right? So having good understanding what works in the financial world then also gives you a great opportunity to optimize where you spend your time and energy. Okay. Again, second part, separate accounts. Really saves you time, effort, and energy. Makes your life so much easier. If you can just say, okay, even if you gave it all to a bookkeeper and said, okay, here's all just my business expenses. That's it. There's nothing else anywhere else. Okay. So much easier. Then create proper budgets and look at them on a monthly basis. Right? What am I spending money on? And am I holding it accountable? And then keep an eye on your taxes, because you do not want to have a fight with Revenue Canada. You're not going to win that fight, ever. Period. Full stop. You're going to spend so much time, effort, and energy on it, it's just not worth it. So don't. Just don't. It's just not worth the hassle. Okay? So get on to making sure that your taxes are done on time every time. Okay, here's some action items for you. Like we said a couple of times now, separate your business account, right? Draft a 12-month startup and operating budget. Right? Draft it as soon as you can think of. Right? Look at your key categories and set aside at least 25 to 30% of all your income for taxes. Okay? It's important. Yes, you have deductions. So if you have a surplus in your tax account, is that a bad thing? You've actually operated and functioned within your means. How's that a bad thing? Okay, that's actually a really important piece to recognize, is that operating within your means becomes actually really one of the key aspects of succeeding in this business, because you're constantly trying to catch up on whatever you spend. I remember many agents, they used debt as inspiration, and it wears you down. You can do it maybe for a year or two and say, hey, I got this new car, I got to pay for it, or but it does wear you down. It puts just an inordinate amount of stress and strain on you and the rest of your family. And it's not always fair, of course, right? So, and it's just not healthy for you. And now you become a salesperson rather than truly being an advisor and consultant, because you got to make the sale. You got to make the sale. Well, you think your consumer might just figure that out? That your priority is not their priority. It's your priority. It's the paycheck rather than helping your client to the next stage in their life. Anyway. So then, yes, book a 30-minute consultation with an accountant, somebody that understands both real estate as well as the financial wherewithal. Okay. There are some reading suggestions. Profit First is a good one. Absolutely is a good one. Your Money or Your Life. Great little book that gives you some real clear perspective. And yes, CRA has a really good very practical tax guide for self-employed individuals. There is also a form, a declaration actually, that deals with the specifics of commission salespeople as self-employed independent contractors. There's a specific form. On the form, it will give you some categories, subcategories that you can use. Most accountants will have, kind of a checklist that will tell you, okay, do this, and do this. Here are the categories that you can deduct. Here are the categories that are kind of gray area. And here are the categories that you just cannot use as deduction. So, and then follow those. Set it up. Set up your spreadsheet, your account in that way, or your envelopes, your shoebox, whatever that method that you use. And then make sure that it is dealt with in the appropriate fashion. Okay? I hope this was helpful, that you enjoyed this session. I certainly like doing this session because it really is a bit of an eye-opener for most people that have had what I would call a traditional career, right? Real estate is not that. Not at all. So if there's any questions, if you have any issues, concerns, you want to talk more confidentially about your particular situation, I'm more than happy to do so. And otherwise, we'll see you at the next episode of the Agent Files, and have a fantastic week.
File saved. The Agent Files. For more missions, agents' tools, and tactical strategies, subscribe and follow the Agent Files, powered by Agent Builder Coaching. Until next time, stay sharp. Your next mission awaits.